The broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone. Welcome to the webinar titled My Setups Week 20 of 2025. Which markets I'm trading and why? Using my rules-based trading roadmap. My name is Alex Piroglu, and and I will be covering some markets I think of or interest, but more importantly, showing my methodology and regarding how I approach markets, and I think it's more important than just showing the trades themselves, because it's more important to show you how to fish rather than give you the fish themselves, the fish themselves. So without further ado, let's proceed with a risk warning. There is always, as we know, a high degree of risk involved in trading. Past results are not indicative of future returns. And S.M.A.R.T Systems Limited and myself and all individuals affiliated assume no responsibility for your trading investment results. I do not make any guarantees during my webinars except one, that you will have losses in trading. So with that out of the way, and this is how my presentations usually end. So for today's presentation, I have some free bonuses for those that manage to stay awake. And the bonus that I have is that I'm launching my own trader community. And this is how it looks like. I mean, it will be launched in a few days. It will have 4 parts: course, closed code indicators, coaching, and community. The courses will be for free. I will be offering everything for free. And the reason is because I think success relies on implementation, not on information. So the courses will be for free. And I'm not saying that it will be a part of them or a sample. The actual course will be for free. And if someone is, committed enough, because I can put the course, the coaching community, but you have to put the commitment. If someone's committed enough, they can get the coaching, the community, and the closed code indicators. So all you have to do to get the free course is email me at alex@alexspiroglu.com, and of course stay awake by the end of the webinar. So let's begin. A brief summary for the people that have seen my my webinars and my work before. My approach has 3 pillars, which I will go through very quickly. First of all, macros matter. I think this is the gist of everything. Macros matter. And this little diagram, which I wish I had thought of myself, but I didn't, shows the red line is basically fundamentals. The um, dark blue line is basically price. And what we see here, this is my view of how markets move. Basically, fundamentals are the driver of price movement, and prices oscillate, if you will, around the fundamental value. So you can see that this one is macro and the other one is basically technical analysis. So in order for me to see where price goes, I have to see the fundamentals, the macros. So that's the first pillar of what I do. And of course, I'll be explaining more of this later on. So I'm just trying to make sure that what I'll be showing later on, where it comes from, so it can make sense. So the second pillar is I'll use what we call an MTMF approach: multiple timeframes, multiple factors. So let's break this down. Multiple timeframes basically means, again, this is a chart by a graphic by a gentleman called Ian Notley, also used by Martin Pring. And it shows that there are three big primary timeframes, at least that I use ones: the primary trend, the intermediate, and the short-term trend. And this is how they interact. But I think each time frame has its own return drivers, multiple. So hence the MTMF approach: multiple time frames, multiple factors. And by that I mean that there are different factors that we look at on each time frame. So for the monthly, I look at the business cycle. On the weekly chart, I look at commitment of trade reports, sentiment, and seasonals. And on the daily, I look at the technicals. So this is how I combine macros and markets and technicals by basically um, seeing different factors on different time frames. So again, this is the second pillar, and the third pillar is that everything has to be rules based. Whatever I do has to be rules based. It doesn't mean that it has to be fully systematic, but it definitely has to be. We have to use systems and indicators as decision support systems. My um, approach to trading is to be semi-systematic, which means use all these wonderful tools and technology we can have, like systems and models and indicators as decision support systems. So again, being rules based. All right, so which markets do I follow? So we can make sure everyone's on the same page. The markets I follow basically are equities, and primarily I trade US and EU futures, and the rest of the world I look at ETFs. And for US and US, so for futures I do short-term trading. For rest of the world, basically for the ETF positions, these I hold for multiple weeks for my the long-term part of my portfolio, if you will. I also look at bonds, again futures and ETFs. FX futures, Europe, commodity dollars, for example, the New Zealand dollar, Canadian dollar, Australian dollar, commodity dollars, and also various other um, FX pairs. And then I look at commodities, which I've broken down in these sectors, if you will, because I don't think commodities are just as uniform, if you will, for example, as equity indices. Because they respond to different economic sectors. So, for example, I've got metals, precious metals, like gold, industrial metals, copper, energy, agricultural, which again are broken down to grains, soybean, the soy complex. I've got food and fiber and livestock. So these seven sectors are which I have pigeonholed, which I've segregated in commodities because they have the biggest amount of correlation. The commodities themselves can move quite differently because they have different return drivers, different factors, but you can put them in these buckets, if you will, these categories, and start examining them under under these groupings. And finally, crypto, because it has, over the years evolved as a kind of an different asset class, although it is a risk-on asset. So, strictly speaking, it correlates very well with the Nasdaq. So, someone could argue you can put it under equity in terms of its correlations. But so these are the asset classes and the markets I follow. So, how do I filter them? Because if you start looking through this lens, we're talking more than 50 to 60 markets. So how do you filter them, which one to trade? So this is what I do. This is the Smart Trade Systems, the roadmap to rules-based trading. So this is how I filter them. Basically, first of all, I look at the macros, which is the why markets move. As I mentioned, if you remember on the first chart, macros move markets. And as I mentioned, again, I do it on the monthly, weekly chart. Then I go into the daily chart and look at the technical analysis, because technical analysis is primarily used as a timing tool. And then I look at the model, basically a rules-based system to bring everything together. So we can go from strategy into a system or an actual physical trade. So these are the factors I look at. Again, at the high level, this is what I do. Actually, sorry, I use the fundamentals as a funnel, the macros as a funnel. So all these 60 markets I will filter out, and I'll be showing you later on how I do this at the high level. And then I go into the technicals. I rank markets, bullish and bearish, and try to see which markets have bullish fundamentals and bullish fundamentals and bullish trend, or the opposite. And then I build a portfolio, which is what I call core and satellite. Core, basically long-term positions with ETFs, and then satellite positions, short-term positions with futures. So let's look at a bit more detail the factors I look at. First of all, I go into the monthly chart. As I mentioned, look at the intermarket cycle. Then I go into the commitment of traders report. Then I look at sentiment, and then I go into the seasonals. Now, all these factors I look at, there are individual modules in my course, which, as I mentioned before during the first part of the presentation, will be given absolutely for free, because I don't believe success relies on information, but on implementation. So each of these factors is its own module. And then I go into the technicals, the trend roadmap, market map. Then I look at relative ranker, the MACDV. This is the indicator for those that probably do not know my work. I award 2 international awards for it. The Founders Award for the National Association of Active Investment Managers, and the Charles Da Award by the CMT Association. Basically, it's a volatility normalized MACD. And then I look at volatility valuation. Again, I've given individual webinars for these factors, but all of these will be gathered in the community. So, and then I put these factors into a strategy, setup score. Basically, the setup score combines, and this is what we'll primarily be focusing on today, to show you how I can combine technicals and fundamentals. And then once I have a setup score who tells me a market has a bias to the upside, this is where the next step is to actually get in, have a signal, place a stop, and then look at the size. So this is my roadmap to rules-based trading, technicals and fundamentals, into a semi-systematic framework. Okay, so this week we will focus, as I mentioned, on setups. The setup score, explaining a bit of the setup score and how we can score setups, basically how we can combine technicals and fundamentals. The factors primarily we'll be looking is the commitment of traders report and sentiment. Obviously, because this is a hopefully a 1-hour webinar, we don't have time to go into the intermarket cycle and the seasonals, and then I'll be looking at going into the technicals a bit at a high level. Look at the trend roadmap, relative ranker, MACDV, and the volatility valuation index, and how we can combine these into the setup score. And then I'll show you examples of smart signals, either coming this week or obviously for the past few weeks. And I'll be doing this across all asset classes, so stay tuned. All right, this is the setup score. This is what I'm telling you. So basically each week, what I do is I have the markets filtered in 2 buckets, long and short. Well, strictly speaking, it's 3 buckets, long, short, and I don't have a clue what's going on, because I don't have a view on each market very clearly, because the data may be contradicting itself. One factor may be bullish, one factor may be bearish, or it's not bullish enough. So if I don't feel very confident about a trade or a market, I just leave it out. So excluding the ones I don't feel very comfortable about, I segment them into long and short, and then I have A, B, C, and D trades, and obviously the trade grade, if you will. And the A trades are the best type of trades, and D are the worst. And I'll this webinar, this is the work we'll be doing today, to show you the work at a high level, how I see markets as long and short, and then how I grade them. Okay, let's start. Try to be as practical as possible. This is bonds. Right, so top chart, middle chart, and bottom chart. Let's do some explanations. Top chart is 10-year notes. As you can probably see in the top left part of your chart, 10-year treasury note futures. This is the weekly chart. On the second panel, I've got the commitment of traders report. I hope you are familiar what is the commitment of traders report. If not, please do watch the previous webinar I did for week 16 when I explained about the commitment of traders report, and also um, why I was bullish on the S&P 500. As we know, the past 4 weeks the market has been rallying like crazy. So again, at the high level, what it shows you is the positions of the largest players in the world, either commercials, people who participate in markets for as part of their the hedging operations for the business, or hedge funds. So the red line is the commercials, the blue line is the funds. And what it does here, I've managed to, crack the code, so to speak, and turn this data, this extremely useful data, into a system, which I use mostly as alerts. So what you see here is these red arrows. The obviously are bearish, the green ones are bullish, but you can see they have different sizes. So you've got the big ones are major signals, major alerts, if you will. I'll try to avoid the word signals, but sometimes it slips because these are alerts. I mean, because once I've got these on the weekly chart, then I go to the daily to look for an actual signal. So it's not a signal per se, in the sense that I get it in one week and then Monday morning I buy. And I say this because these are created on a Friday evening at the close of each week on Friday. So as tomorrow we'll be having a new signal if there is one created. These do not come midweek. So so how do I work? Usually the big signals are, which I try to follow. The green ones are usually the ones that stall the major trend. But if I see a new trend coming out of a major signal, of a minor signal, then I know that we're probably talking about a change in trend. So, and the bottom panel indicator is sentiment. It's basically a sentiment composite from various other sentiment indicators. And the color coding of the bars is basically my bias from sentiment and commitment of traders report combined. So basically, again, reminder, this is a weekly chart. So when we see the bars in green, it means that we have a bullish bias. So as long as the bar is in green, then I switch on the daily chart and then try to buy signals there. So with this macro indicator, sentiment and commitment of traders report, I can have a very long-term view of the markets, which gives me a lot of time to um, go in and take a large move. So as of this past few weeks, the 10-year Treasury note futures have a bearish bias based on the commitment of traders report and sentiment combined. So let's switch to the daily chart. All right. So again, let me explain the top chart again. 10-year note futures, color coded daily chart. The second panel is what I call the market map, the trend, if you remember on the roadmap we saw. So basically the trend for me is bullish or bearish, and bullish trend is again classified in 4 different stages, and then the bearish trend is in another 4, which is 8 in total. So basically on a mechanical way, I have classified the trend, and based on that I can see, I can time my entries. And this is crucial, uh, guys and girls, in the sense that if I have a bearish bias, then I want the market to start confirming it. I will not be taking a trade just because the macros say this is bullish or this is bearish. What I will be doing is waiting for the market to confirm. And the second panel, we have the volatility valuation index. Again, I've got different webinars on it. The idea here is when it's at extremes, market usually reverses. And then I've got the worded MACD. So how I actually use this, and then on the chart itself, you can see I've got some short signals. This is a mechanical entry system that I use. Uh, it produces both long and short. Now the long signals I've deliberately taken out because since we have a bearish bias, there is no point for us to be looking at long signals. So what I do is I basically look at the weekly chart, the bearish bias, and once that or a bullish bias, and then I go to the daily chart, wait for the trend to confirm, and then start taking my signals. And so this is my trade here no futures are looking basically for short signals, and we got one a few days ago. Now also looking at other parts of fixed income, for example gilt futures, and then the short signals that we got through the system through the smart signals. So setup score, let's go to look at the setup score. So as I mentioned, these markets have a bearish bias. Let's go back to make sure we know what we're referring to, because yes, you can see the commitment of traders report system is still red, which means we have still looking to short. Obviously that was for the 10-year note futures, but I've also have gilts as well. So this is in stage 6 now, quite bearish. And so these two will go on my list for potential short signals. Now, because of the different trends, one is in stage 6 and one is in stage 5, they will be classified in different ways. So the more bearish, it's an A trade. The more bullish, it's a D trade. For shorts, for longs, it's the other way around. And what I mean by that, so if I have a bearish fundamental bias for two markets, and one, the trend when you go into the daily chart is bullish and one is bearish, they will be classified differently. The more, if you have a bearish trend on the daily and a bearish bias on the weekly, that's an A trade. So based on this notion, I have classified them. One is an A trade and a B trade. And that, what does this practically mean? Which means if you want to be shorting fixed income, it's better to be doing this in A trades and B trades. Now, on the again, all things being equal. Now, on the bottom part of the screen, what we have here is basically all the fixed income markets that I follow, the futures markets, and we have what is called a relative ranker, so from most bullish to most bearish. So obviously, since we have a bearish bias, the most bearish ones are the best ones. So this is why we've and I've put this in a numerical value. So you can compare likes with likes, and you will see why this makes sense a bit later on, because as we go through the list of markets I follow, we will be populating these boxes with more markets. So if we'll have 2 or 3 candidates with A trades, 2 or 3 candidates with B trades, 5 or 6 with C trades, 10 with D trades. So relative ranker basically is a tiebreaker. It will show you which one is more preferable to look to short, all things being equal. So let's look at FX. Now that we've used the bond market as an explanation board, we'll be proceeding a bit faster. So let's look at FX again. Now we're looking at Euro FX, and we have again top part is the Euro. The second panel is commitment of traders report. The red line is the commercials. Blue line is the hedge funds, the funds, the large traders. And at the bottom, we've got smart sentiment composite. Now, during December, we've got a buy signal, a major buy signal, that you saw how the market managed to stop its decline, which means we had a lot of commercial buying, and then we started the rally. Now, currently we have a a bearish bias, but that's a minor signal. Minor signals usually, most of them do not stop the market. They usually present some kind of a counter trend rally. But when they do uh, um, produce something more meaningful than that, then we start understanding that we're having a change of trend. Of course, if there are other factors on top of it, you may want to be following minor signals as well. But for this one, I think we'll be looking at this as a counter trend rally, counter move rather than something more meaningful. But that said, as you can see on the current signal being bearish, there have been 3 weeks, excluding the signal week, the alert week, that the euro has been making lower highs and lower lows. So let's switch to the daily chart. Again, color coding is based on the trend roadmap, the 8 stages. Now it's in stage 3. Stage 1 and 2 are bullish. Stage 3 and 4 are counter trend. MACD at the bottom is at the retracement range, and volatility is not at an extreme. So in theory, you can be taking shorts, but these are kind of like counter trend. So let's look at how we can score this. So now the euro will be a D trade. Why is it D trade? Because it's a short, because as we saw on the chart, we have a minor COT alert. We also have the sentiment saying that it's bearish, so there is a short bias, but it's a D trade because the trend is bullish. The 325 reading actually quantifies the relative ranker. What we see at the bottom is basically the most of the futures markets I follow, and you can see euro is the strongest um, second strongest FX pair that I'm following. So it's probably not the best candidate to short. But that said, since we've got a signal, we have to classify it there, but also put it as a D trade. So now, as things stand, you can see that we have a short bias for gilts, a short bias for 10-year notes for fixed income, and a short bias for euro. But you can see one are 8 trades because the trend is already there, the bearish trend that is, for 8 trades, and then for D trades it's actually counter trend. So hence these are like risk grades. So to compare likes with likes. Second, then I look at the Swiss franc. Again, you can see the commitment of traders report by and large produce very good meaningful rallies, especially when there are uh, the big arrows, the major alerts. Now we have a minor alert. Again, the same time as we had for the euro, the past 3 weeks again, we see some counter trend move, but as you can understand, this is the weekly chart is a counter trend. Again, switching to the daily chart to see the trend. Now this is in stage 3 for the market map. This is the second panel I'm referring to, stage 3. Volatility is not in an extreme, and the MACD again, it's at the retracement range, indicating that there is bearish momentum. And we had the short signal 4 days ago. Setup score. So this is where the Swiss franc would come in. It is the relative ranker is at 352. Now, why is the Swiss franc on the setup score below euro while it has a bigger relative rank? Because on the bottom at the bottom panel, the bottom table, you can see the Swiss franc is the strongest currency pair. Well, since we're going short, what we want is something that is weak, not that is strong. So that's why between these two, all things being equal, it's better if you to watch the euro than the Swiss franc because the Swiss franc is stronger. But both of them are D trades. I hope this makes sense to you. How we can put things into perspective, combine technicals with fundamentals, and also the relative ranker being tiebreakers and giving a big picture view because not all short signals are the same. All right, so let's stay with the FX, go to the Canadian dollar futures. Now, again, same thing, looking just these two factors. I'm not going into the intermarket cycle or seasonals. Canadian dollar futures is making lower highs and lower lows, pretty clear. It's below the S.M.A.R.T 200 bar moving average. Another tool I've created to see the trend. It's color coded. It's got different stages, but I won't go into it today. Um, Again, look at the same principle. The big arrows provide major alerts, usually have longer lasting moves. Currently, for the Canadian dollar, we have a major COT sell alert based on the date on the second panel. Smart sentiment was also very frothy. So we have two factors saying that this may be a good trade to the downside. Plus, on the weekly chart, you can see that it's making lower lows or lower highs. So looking very, very interesting, a short on Canadian dollar. So let's go to the daily chart. This is how it looks like on the daily chart. Because as you can see, you had from March till July, it had a rally. Now we're looking to retrace that rally. So the market is at stage 8, which is the rebounding stage. The MACD is bearish, and at the retracement range, the volatility valuation is below average and doesn't show an extreme. So we have nothing to stop us, from start taking short signals. And we had one again, 4 or 5 days ago. So short Canadian dollars, we have an existing position there. So where would this look? Again, because this is counter trade on the daily chart. I do the setup score on the daily chart. It's a D trade, and also it has a relative ranker of -17, because if you look at the table below, Canadian dollar is -17. So if someone's looking to short the dollar and says which is better, should do Canadian, Euro, Swiss, all things being equal, the weakest of these is Canadian. So you want to be, as a matter of principle, shorting the weakest and buying the strongest. Okay, New Zealand dollar, again staying with the commodity dollars, lower lows and lower highs on the weekly chart. The market, kind of stabilized in 2025. We had two minor COT bullish alerts, produced a rally, a big alert that was cancelled, and now we have another one last week, which probably will be confirmed this week as well. So let's look at the New Zealand dollar on the daily chart. Stage 8, the rebounding stage on the trend, on the 8-stage roadmap we use. And we had again 4 days ago, we had a short signal. Volatility valuation is not too extreme. Again, MACD is at the retracement rate. You see, there is a uniform picture of rallies from the beginning of the year against the dollar, and now the dollar seems to be strengthening. The setup score, New Zealand dollar -25 again. So which means weakest than the Canadian dollar. So from a short point of view, it's preferable to be shorting, all things being equal, New Zealand dollar versus the Canadian versus the euro, the Swiss franc, which is the strongest. Japanese yen, again, same thing here. We had a minor sell signal, sell alert. If we go into the chart, now this is in stage 3. So again, look at the MACD valuation. Obviously, will be there are a lot more factors to look at, but now we're trying to get it's during this webinar, the idea of how to go by technicals and fundamentals and how to rank them at a high level. Again, setup score, and this is where the Japanese yen would be. Commodities, energy. Now, for energies, I don't see anything hugely. Um, I mean, if you now, let me put it another way. These four charts going from clockwise, top left, um, heating oil, light crude oil, natural gas, and Brent, with the exception of natural gas, have from a commitment of trade report of view the same picture in the sense that they have minor bullish alerts which are counter trend, and they usually produce short-term rallies. So from a short-term point of view, we might expect a rally in energy, especially if it coincides with some uh, strength in the dollar. But I'm not to feel too confident to have a long position in energy. I mean, on a speculative base, you might want to try, but I wouldn't recommend it for these reasons. Now, the only trade in the energy complex which seems to be make a bit more sense is the major short alert we had on natural gas, and this is how it looks like on uh, the daily chart. We actually had a short signal yesterday. Markets is in stage 2. Market V is bullish. So natural gas, again, it's a D trade. 121 is the relative ranker. And at the bottom below, what we are seeing is the relative rank of the energy complex. Now, natural gas, ironically enough, is the strongest of these. So again, that's why I have it as a D trade. It's a bit speculative, if you will. I'm not saying that if someone you shouldn't be taking D trades, but as long as you are aware of the risks involved, that you're doing this counter trade, and B, you can adjust your position sizing based on the quality of these trades, whether it's A, B, C, or D. Then look at precious metals. This is the signals we had for gold. This is gold. The two major commitment of trader report alerts we had. The second panel, again, this is the commercials and large specs and sentiment. So sentiment has turned for the past 4 weeks, I mean, including this one. And this is how it looks like on the daily chart. We had one speculative, very speculative signal 3 bars ago. I haven't taken this trade because it's extremely speculative, in the sense that the market is very, very strong. So I haven't taken this. I wouldn't be taking it. But since it's there, for someone who has probably a bigger appetite for risk than me, we had one 3 bars ago. So this is where gold would go. And as you can see on the table below, on the precious metals complex, it's the strongest market. It's the strongest market, one from these I follow. So that's why, as a potential short trade, it will go right at the bottom of the list. Because it has a relative ranker of 765, which is much, much stronger than other markets. Very speculative, very counter trend. So look at, again, staying with the commodities, and at the end we will be looking at Bitcoin and S&P 500. So commodities, agricultural and grains. Sorry. By the way, if there are any questions, feel free to ask, and feel free to send your questions. So let's go to the commodities, agricultural, the grains. And this is wheat futures. Again, on the weekly chart, what we see is a pattern of lower highs and lower lows. The ags seem to be, have a bearish trend. Commercials gave a sell signal, a major sell signal a few weeks ago, and the minor buy signal we had in April was very extremely short-lived. It didn't last basically than 1 week. Again, it shows structural weakness. Let's look at the daily chart. Again, I've just noted here the short signals because the S.M.A.R.T signal systems I use is obviously both long and short, but when I have a bearish bias, in order to avoid confusion, I double click on the indicator and choose to have just short signals. There is no point to be having buy signals on a chart on a market that I'm looking to trade on the short side. Again, looking at the short signals, the last one we had was in April, around the 17th of April, and the market tanked from there basically. The only thing that worries me of this is that we already had, basically this is in stage 6. This is, as bearish as you can get. The only thing that worries me is the indicator at the bottom, the MACD, which is at the approaching levels which can be moderately oversold. Plus, we've already been falling since mid-March, so the market could be could bounce and be due for a breather. So, but for the here and now, being completely rules based, I have to classify this as an A trade. But just look out for momentum. Perhaps if I would feel more comfortable shorting this at a bit higher level. If we see a relief rally, then I will be looking to short into that rally. Okay, so strictly speaking, wheat is an A trade. So the best trades are looking for gilts and wheat, and then B trades on the short side, and then 10-year treasury notes. And then we've got the various other FX and commodities. Let's look at corn futures. Again, corn future, we stay in the same complex. We see commercials buying into the weakness per their usual pattern. That's the red line in the second panel. The blue line is back on the second panel represents large speculators. These are trend followers, which means as the market falls, they continue shorting, and that's why you see the correlation of the blue line with the market itself, the trend. If markets goes up, then they continue buying. If it shorts, then they continue. If it falls, then they continue shorting. And also have the S.M.A.R.T sentiment. So what we're seeing here, we have bearish sentiment signal, sorry, bearish COT signals alerts on a market which on the weekly chart is falling. So let's look at on the daily chart. So on the daily chart, again, we have the signals. We had one in April, and the market responded to it and gave us a very big move from April, I think 12th, all the way now. So I had a very, very big decline. Now, the only thing, again, kind of worries me is the fact that the MACD is at very, very low levels. So this is on MACD again, I'm referring to the indicator on the third panel. So this may kind of like worry me that the current decline may be approaching its last stages and perhaps a bounce is due. But that said, again, the corn, that's why I will be put as a D trade. So let's look at the soy complex. Soy complex again, same exercise. Now, the point I'm trying to make, of course, as you can understand, is not just the signals themselves. A is how to combine macros move markets. B, you have to be rules based. And the third point, that it doesn't take be rules based. And since we are rules based, it doesn't have to take hours upon hours to analyze the chart. And also, by being rules based, we're being very disciplined. Now, that doesn't mean we'll have an answer for each market every day, but when there is a clear setup, we will be able to identify it, take our signals, use our stops, and be very systematic, very rules based, very disciplined. Because I think that's one of the problems that traders have. They don't have discipline and confidence, and because there is no discipline, the mediocre results tends to affect their confidence. Um, I've heard of, let me digress here a bit. I've heard of people saying that, trading is 80% psychology. I would kind of I think that's kind of wrong, because trading, I think, um, on because there are 5 stages of trader development. On the initial stages, it's less a matter of psychology. It's more of a matter of techniques and knowledge, because people at the initial stages of trader development, their problem is not lack of discipline so much, is ignorance. So people have to be taught a rules-based system, and once you've got that, then you look into psychology. Because if you start bypassing rules, which means you have excluded the possibility that's a matter of, I don't know what to do, then you look at start examining the case of why we are not doing what we are doing. So at a later stage, so stages probably 4 and 5 of the 5 stages of trader development, that it becomes a psychology issue. So for a new trader, I wouldn't bother about psychology initially, but more learn the fundamentals, either of the macros or of the technicals. And then once you've got them pinned down, then you start practicing, again, preferably in a community environment. Get some coaching, and if still there are mistakes, then we start analyzing them and breaking them down in 2 parts. One is the technical part, maybe something has been misunderstood, or on the psychological part, then you start approaching on the psychology side of things. And now, with that small parenthesis on about trader training, like again, soybean meal futures, again, we're seeing the market start having a bearish trend. Commitment of traders board have been quite accurate, and the major signals, the minor signals, have produced counter trend rallies. And now we're seeing the market, the past few weeks, been kind of in a sideways trade, consolidating. And this is how it looks like on the daily chart. In stage 6, it's the most bearish stage. Well, again, taking short signals with bearish fundamentals and in a bearish trend is probably your safest bet. And the last signal we had around the 17th of April, you can see that it worked quite well. Obviously, not all signals will work as well, but what we're trying to do is put the odds in our favor. And down at the bottom below, again, the relative ranking of the soy complex. The soybean meal is the weakest market, minus 218. So wheat would be an A trade. So A trades are gilt, soybean meal. Again, soy meal, we talked about us, and wheat. Wheat, we just made a small note about the low level of the MACD, and soy meal, B trades, 10-year treasury notes. Of course, I haven't analyzed all the markets that I follow. I could also be, for example, I haven't put anything from the German fixed income market, which I follow closely, like, for example, the Bund, and also the D trades, commodities, and various FX markets. Again, so now going to food and fiber. Cocoa futures. This was a strong bullish signal we had a few weeks ago, and I say weeks because this is if you remember, the weekly chart. So we had a bullish alert. The market responded to it. So let's go into the the daily chart. Market's currently in stage 1, bouncing back. Now, as you can see, these are the buy signals, but I wouldn't have taken these because we didn't have an alert. So let's go back to the original chart. So as you can see, the alert we had was one. Unfortunately, when I copy and pasted the chart, I didn't do the dates at the bottom below. So let me try to reverse engineer what date we're talking about. This is 1, 2, 3, 4, 5, 6, 7, 8 weeks ago. So 2 months ago. So that should be beginning of March. Let's go to the daily chart. So starting from the beginning of March, then we should be taking buy signals. again, the indicator here, the S.M.A.R.T signals indicator, has been switched on to just buy signals because we have a bullish bias. So all these, the last 4 buy signals, starting from right to left, are the ones we would have actually taken, at least on this chart. Cocoa, so basically it's a long beat trade, a relative ranker of 89. The good thing about relative ranker is that it's comparable across markets. And of course, as you can see now, we're starting to compare likes with likes, scoring fundamentals and technicals, and, and making the point that a buy signal is not a buy signal and a sell signal is not just a sell signal. It's a bit more complex than that. So again, staying on the food and fibers, cotton futures, we had the commitment of trade report alerts. Again, as usual, now the one, look at the one in March. It lasted from March, beginning of March, all the way till May. But you can see with the huge drop. Now this provides a very good background for you to start looking on for short signals on the daily chart. Now, it doesn't always work this way, but what we're trying to do is put the probabilities behind our decision making. Unfortunately, it's not a perfect world, but using this framework, you definitely have an edge in a lot more probabilities than just following the news, Twitter, or forums or other methodologies which just don't work. Again, going to the daily chart, again, the short signals, we got a short signal on cotton futures yesterday, and the market has responded today. These are mechanical. Again, you can, this can be basically, back tested. I haven't made a note here on the exit techniques, again, because it's besides the point, but all of these will be in the trading course, will be given for free. If you email me or manage to stay awake. Again, setup score, the cotton, as you can see, cotton, yeah. So we've all placed it again on the setup score. It's an A trade right at the top. So we've got cotton, gilt, soy, and wheat because it has so it is an A trade because of the trend. And between these 8 trades, it's at the top because it has the lowest relative ranker. So cotton, gilts, soy, and wheat. Again, these are not mechanical sell signals. We have to be looking at the signals on the daily chart, but it just goes to show you how we can do it rules-based trading. Crypto, and then we're approaching the end. After crypto, we'll do S&P 500. So again, this is crypto. We've got the major commitment of trade report alert. Sentiment is bullish, and since then we've had 8 weeks of rising prices and 8 weeks of trying to look for having a bias and trying to look for buy signals. Again, this is the signals we'll be having on the daily chart. Now you can always try to use other techniques, and I haven't programmed because basically I'm migrating my work from other platforms into TradingView. So I will be inserting into the S.M.A.R.T signals indicator more buy signals because these come from various, say patterns, indicators. So I haven't put everything there, so there will be more signals there. So of course, if you have a bearish bias, you can use the S.M.A.R.T signals to use them to guide you into the market, or you can use your own. The big the difference that will make the difference is the macro work you do on the weekly chart, and the trend momentum on the daily. The signals will, you can, if you've got the market right, because jokingly you can just throw a dart at it, so to speak. Again, Bitcoin and Cocoa are the big trades on the long side. So look at equities. Right. So let's do the recap of the last video. This is kind of like my bragging moment, if you will. So this is the my setups. Actually, this is the video we did 4 weeks ago, week 16. Now we're week 20 of 2025. This is how the chart of the S&P 500 looked like. And I did a very in-depth video of the S&P 500 analyzing it, because what we have seen so far was, I wouldn't call it in depth for each market. It was more like breadth of coverage rather than depth. I showed a lot of markets. So on that video, I covered the S&P 500, and I gave a buy signal. This is how the chart looked like then. And I made the I was of the view, made the call that I think the market would rally, and this is how it turned out. Now, this view is on YouTube. Again, feel free to email me and I'll send you, not because I have, it doesn't mean, it's not about bragging rights or anything like that. But that video provides a more in-depth analysis. So you can see as a sample of the techniques I use. So you can use it for educational value. All right, so this is the daily chart. Market is rebounding, going from stage 7 to 8. We had 2 buy signals using the SMART signals methodology, and as you can see, the market has been rallying. Now, since another technique I use now, because the S&P 500 obviously is the bellwether index for equity markets worldwide, but I don't trade just that, because some markets may be more having a better performance, and there are markets out there with better performance, and I'll show you. This is the table. So for example, the Athens index is the strongest equity market of the ones that follow. The DAX, Hang Seng, FTSE, and so Nasdaq in mini Nikkei. So what you can see here is that there are stronger markets than the S&P 500. So although you may do your basic analysis on to get a gauge of what equity markets in general will do, you may actually want to be um, looking at other markets as well, other equity markets as well, and taking buy signals there. So this is the DAX. It's performed much better than the S&P 500, or the Athens Stock Exchange FTSE. Again, 2 buy signals. Now it's making new highs, much stronger than the S&P 500. So once you've got a bias on as an asset class, then you can start looking at the strongest markets and try to take buy signals in this. It doesn't have to be the most popular market, as as long as the market is you're choosing is liquid, then you're good to go. So 8 trades on the long side would be Athens, the Athens index for the large cap index for futures. DAX, B trades will be long Bitcoin, Cocoa, C trades S&P 500, and this is your short side. So again, this is a sample of what I do each week to give me the setups scores, and then so basically it's Monday I do the setups, or weekend I do the setups, and then during the week I just look for the signal. So it doesn't take me that long, because most of the work is on the setup, and it is very rules based. So there are a lot of opportunities for me to look into, so I don't get frustrated if I miss a signal, because there are always signals there to take. There are always markets to look, and if I miss something, opportunity, fine, it is. I'm more concerned on the money I lose rather than the foregone profits. So free bonuses for those that manage to stay awake and contact me. Again, send me an email, because for each of these factors that I showed you, I will be having a separate module. So the whole training program, I think, will be anything from, conservative speaking, around 6 to 9 hours. I'm trying to condense it as much as possible to be completely practical. And again, it will be for free. So if you have any questions, I will gladly take them. And if not, I will let you go. And I would like to thank you very much for the opportunity of this presentation. I hope you enjoyed as much as I have. That said, good luck and good trading. I have one more address. All right, I have a question. Hello, please. What is the email address? It's right on your screen, alex@alexspiroglu.com. Again, if there are no more comments, thank you. Thank you so much. The comments are coming in. Thank you so much. Thank you all so much. Guys and gals, again, good luck and good trading.